Hey guys, welcome back to the Max Spence Business Podcast. Today I have a very special guest, but before I jump into that, if you guys like the content I'm putting out, please like, subscribe, leave a review. It helps out a ton with the podcast and also the people that are coming on the show. If you can go over to Apple Podcasts and leave a review, that helps out a ton as well. So today's guest is Rizwan. So he's the founder of Riz International, a company that helps others invest into the stock market. Riz has been an investor for 12 years now and was able to grow his holdings from $5,000 to over $2 million. It's great having you on the show, man.
Thank you. Thanks for having me. It's a pleasure to be on.
Awesome. So for people that maybe, I know you have, you've got like over 100K on Instagram and then, a following on YouTube as well. For people that maybe don't know who you are, don't know your story, why don't we just start off that at that sort of place? What's your background? What sort of got you into trading as well? And then the interesting thing I want to mention as well is that you're actually Canadian, you're actually a Canadian investor, right? So like,
Yeah.
to be honest, I've never really seen I know they're out there, but I mean, like I've never seen many, like social media, very active social media investors and stuff that are Canadian. It's more
Yeah. Yeah. No,
in the
you're right.
US space.
You're right. We're a limited commodity, so to speak. But yes, I am Canadian, surprisingly, because a lot of people, of course, assume that I'm American, and obviously I have a lot of clients, students, members from there. Of course, in fact, primarily I trade the U.S. markets. I specialize in U.S. markets. So being Canadian, yes, I reside here. But a lot of my exposure is to the U.S. But to give you an idea, I started, about 13 years now. It's been about 13 years ago, and it was 16, 29 now. So gotten a bit gray and old since then. But it's just something I started off with being curious. Getting started. It was like, well, what is the stock market? You hear about it. I remember my dad mentioning it, a few times, and I'm like, I don't know what he's talking about. I was very young at that point. And back then, I remember you had to place trades by calling the broker, right? Because in the late 90s, early 2000s, um, I remember him making a phone call, and I was like, I don't know what he's doing, but he's telling someone to do something. So that sounds cool, right? What kid doesn't want to do that? So I immediately was just, interested. But of course, being so young, I couldn't. But when I was about 16, I said, you know what? I think I can, get things started. I said to, my father, Dad, can you open up a custodian account, right? So this is when you're below 18, under the legal age, you can have an account, but it has to be a custodian account, meaning a legal guardian has to open it for you. For those wondering, well, how did you start at 16? I started because I was able to put in a few $1,000s, about five, from when I started saving up from very young age. I did like odd jobs and, gas station work, and stuff like that when I was young. And whatever money I could scrape up, I just put it in because, hey, what else am I going to do? I didn't know anything about paper trading or demo trading at that time. I didn't even know that was a thing. And yeah, it just kind of snowballed from there, being 16, just not knowing what I'm doing, just putting some money in stocks and companies that I recognized. That was my only saving grace. It was just unfortunate though that when I started, a few months later, the market decided to just dump. Big banks like Lehman Brothers, Bear Stearns, on Wall Street, they went down. At that point, I didn't know what they were, who they were. It's like, who's Bear Stearns, and why is this? What does it have to do with a bear? And I didn't know what was going on at that point, but it was a very, very interesting time, and I wish I was just able to kind of compartmentalize it, understand it, and you know what? We all start somewhere, right? It was a different time back then. I remember, cost me about $20, $25 per trade back then.
Wow. Yeah. That's absolutely crazy to think about, like how far it's come now, like with Wealth Simple and Robinhood and all these platforms where it's like you can just hop on and just create an account and you're just trading instantly.
Yeah, dude.
Which I think there's a huge benefit, but also like there's a bit of like risk with that, right? Because like, when you first jump into something, you sort of catch that. I don't really know what it'd be called, but there's probably a saying for it, but it's like when you go into something new and you understand it to a point that you think you understand it, but you're
Yeah,
just scraping the surface, right? And then
Yes.
you have enough knowledge to be sort of lethal to yourself, right? Because you walk in, you're like, oh yeah, I'm starting to understand things, so I'll start doing stuff.
Yeah.
But then like you realize like, oh, there's like a whole other, like you're at the tip of the iceberg of the amount of information you have to understand before, like you can actually start, reaping the rewards of it.
Yeah.
So taking it to now, for people that maybe don't know, like I was looking at your LinkedIn profile and just getting a little bit to like, better to know you and stuff. And I saw that you ran some gas stations, then you were the owner of a Canadian Tire Center. How did all that sort of come about and sort of happen? Like, through university, you're also a very young guy as well at 29 years old, right? So how did that also, how did that sort of happen? And then what sort of led the trajectory from that to then, working at a bank and then, starting your own, pretty much like school and, personal training?
Yeah, so it was I'm fortunate to be able to have some experience in a wide array of things. So to give you the kind of timeline, when I was 16, I finished high school at 17, and I went right away to college, and I did business management. And while I was working in high school, I was also working at a gas station, right? So just regular job as cashier. So that was my first foray into like working at a gas station, not owning or having anything to do with that, just a regular job. And in fact, as I got older, piled up some money, and I did better in markets. It took a couple of years at least to figure things out and actually start making some money in markets. And when I did, I decided, you know what, I'm going to keep doing this. I love this. There's a lot to learn, but I have to diversify. I had the opportunity to get a tiny, small a private gas station. I, in fact, was called Riz Gas and Convenience. About 2.5 hours away or 3 hours away from where I stayed. It was a bit far, so I couldn't actively, go back and forth. But I decided to, get that business and get that running. And with Canadian Tire, I was just a manager there. But once I did that, I got my own gas station. I was like, you know what, it's good. But as I got in my early 20s, I can remember 21, 22, something like that. I was getting bored because I'd already been working at a gas station as a child, like pretty much as a kid. I remember, 13, something like that, just working cash, small time, filling up propane tanks and stuff like that. And at that point, I was like, I'm getting bored of this. It's not something that I'm passionate about. I know I was passionate about markets, but that wasn't my full-time thing. I did that alongside going to college. And I decided to kind of rotate at a gas stations and of course, diversify. And since I was getting bored, I thought, I always wanted to kind of see what banking is like, finance industry is like. And being here in Canada, I joined one of the largest banks here in Canada to kind of just give my hand and try it out. I always knew that I was interested in that line of work, but I never knew what it was. So, you have to get some of your licensing and get some experience, go up the food chain. And it was a good experience because I learned a lot just by working for someone at, in a financial institution. I had some odd job experience, but, working at a financial institution was good. But even that was disappointing. I got tired. I was like, I don't want to deal with this bureaucracy, this 9 to 5. I like having my own thing. And in fact, I did it not because my friends were like, Riz, you're crazy. Why would you, leave a flourishing business? You still have, money in markets. You're still doing markets and everything. But why would you go work for a bank? Like, ew. Like I was like, well, I want to see how it goes, and just kind of see what I can learn. And then after that, I can always just, go back and do my own thing. And that's what I did. Trading was going well. I got my experience, realized how the industry kind of works in, behind the curtain. And you know what? It was all a good experience. In fact, I still have exposure to gas stations. I just don't actively manage them. I'm not there day to day. But my main bread and butter, I would say, is of course markets. My specialty, my passion, everything to do with markets, not just trading, but helping others, like you said, with whether students, members, so on and so forth. And of course, diversifying into different asset classes, like real estate, and ultimately just being relatively diversified helps, not only making sure that, I'm not overexposed to any one single area or one single income source, but also that I'm capable and understand a few different areas, right? I'm not a real estate specialist. I'm not a real estate agent. I'm not a house flipper or anything like that. But at least I have a bit of an understanding about real estate. And of course, still, I know my core bread and butter is markets.
Oh, okay, okay. So like your exposure to real estate, is that by like actually owning like let's say a single family house or a townhouse
Yep.
or
Yep.
okay, yeah, so
Yep.
you have
Physical real estate. Yep. Physical real estate, my own, physical real estate, as well as having exposure to real estate as proxy via markets, like for example, real estate investment trusts, right?
yeah.
Those I've always had, they're great, especially in Canada. We have some great REITs that, I've been holding and, either going in and out but having some exposure to for many years. But physical real estate, yes, over the past few years in my mid 20s is when I started to kind of diversify into physical real estate here. And obviously, I mean, for those aware of the real estate market here in Canada, especially in where I am, it's just bonkers. It's crazy. It's
Yeah.
like some people throw out the word bubble, but either way, I just got it as a diversifying kind of way because I don't want to just have millions and millions in markets because you don't need that much. You don't need that much to for me at least to be able to do my strategy, my methods and style of trading. So anytime, I have a bit of excess capital, I just take it out and diversify either in my other businesses or real estate or put it into different registered accounts, whether it's a TFSA or, the equivalent of an IRA or a Roth IRA.
Ah, okay, okay. Yeah, yeah. That's very interesting. Okay. So like talking, I know you talked about it just for a few seconds there, like your investment strategy, right? Like what over the years, like it's probably changed a lot from once you first started to what it is now. But like, are you more of like a value investor for long term? Are you like, maybe short term, or are you like sort of a mixture? Like what would you say your style is?
Yeah, so that's a great question. So I do what's called swing trading, which is buying, you're taking position of a trade, and with the intent of keeping it open for at least a few days to a few weeks, right? Sometimes it's months, right? So also known as position trading. So I do that. That's my core. Plus, of course, also investing for a little bit longer time frame. So not like buying and holding for like 2, 3+ years, but more so strategic and more shorter term than that. I would say probably 6 to 8 months. I do that as well. So combination of more shorter term to me, which is swing trading, and a little bit longer term. Right, I don't do the day trading nonsense stuff like that. There's no really any edge for most people in that. And that's kind of my focus, right? And of course, I use stocks predominantly, but also I also use different kind of strategies and methods for options trading as well.
Ah, okay, okay. I actually that's something pretty interesting, which I've always I've heard a bit about, but like maybe for some of the viewers, you could tell like like sort of what is the definition of options trading and what are the benefits, and then also like what are the the cons to option or the risks to option trading.
Yeah, so the best way I can describe options is it's a leverage financial product, and think of it like it's a derivative. It's known as a derivative, right? We trade derivatives. Options is just another word of saying derivatives. It's a derivative of something else, meaning it's based on something else. So an options contract, in this case, the way I trade them and what I trade, and most people trade, is a derivative of a stock. So this options contract is going to be tied to a stock, and depending on how that stock moves up or down, can impact the options price, okay, that we have exposure to. And essentially it's leverage. So it's a pretty much 100 times leverage to, essentially owning one stock. When buying one contract of an options contract, you have exposure to 100 shares, right? So it's leveraged. There's many different moving parts and pieces. I consider options to be a little bit more advanced financial product, contrary to belief. People actually start with that, although I don't know why. I guess they want to try and make easy money or make money faster, when I recommend instead starting with stocks first, because it's a derivative of stocks, right? You got to understand how the underlying, which is the stock, works, how it moves up and down, what makes it move, what causes the fluctuation, what's the value behind it, what's the company, because it is a company. And then you understand that, then you can move towards options as well, right? So mixing both. But unfortunately, in this day and age of people just wanting to get rich fast, or just follow what's on the internet or some social media guru, they just start with options, which is like, it's starting to trying to drive a Formula One car without knowing how to drive a regular, Toyota on the road. So, it's just, to me, it blows my mind. But hey, you know what? People got to learn, and there's no better way than learning than doing.
Yeah, 100%. So now talking about like you mentioned that you do swing trading, and for that, like how like what's your process of like analyzing companies? Like let's say you like well, if you'd be open to talk about like one company that you ran through recently or in the past months, that like what was your process of being like how did you identify that, saying like, hey, like Walmart or these are just big names, but like Walmart or Amazon, I think there's going to be, they're going to go up in the next, let's say 2 weeks or something, or in a week or something. Like, how did you sort of analyze that? And what sort of systems did you use to actually sort of crunch that data?
Yeah, so that's a great question. And in fact, many traders, we use a multimodal kind of method. So one is fundamentals, which is the kind of core stuff that you probably heard of, looking at financial statements, or not even financial statements, but looking at the company's, financial ratios, the metrics, how much money they're making, what's the revenue, what's the profit, what's the growth, right? Looking at these are quantitative methods of actually seeing the numbers, right? Another kind of approach is technicals, which is now looking at the charts, the pricing, the movement of the prices, and on the charts, right? Whether we're looking at candlestick charts or line charts or whatever, and using different indicators. So I use a mix of both. Remember, the shorter the time frame that someone is trading on, the more weight that needs to be assigned to technicals. The longer someone wants to hold something, so for example, Warren Buffett, he holds things for years and years, right? He is more reliant on fundamentals, which is, the financial statements, the operating ratios, what the profits or losses or revenues are. So it's like it's a pendulum that swings one way or the other. One way needs to be more heavier than the other. For me, it's more reliant on technicals, especially when it's shorter term. And in this market, because, fundamentals have been less important, probably because, there's so many retail traders now, meaning the average person just got into market. And the average person doesn't care. They just want to buy something that goes up, right? So fundamentals have been kind of out of favor for now, but of course they matter in the long run. And for me, I use both, right? So for example, to give you an idea, a company that you mentioned, Walmart, I love it. In fact, I have some. I bought some, a few weeks ago, and I still hold some, right? So what made me decide to do that? One, because I know the company, it's a solid company, it's not going anywhere. I gravitate towards these, good fundamental companies first and foremost. Then I also look at the technicals, right? Where is the stock in relation to where it was? What price level is it at compared to where it was a month ago, a week ago, a year ago, right? And of course, it's a basic, I'm a very, watering it down there, but there's a lot more to it. But ultimately, taking a look at price levels and different indicators, and then I kind of put them together and make a decision. Am I okay with buying it at this price point? And what's my time frame? And usually for these kind of solid companies, I don't mind holding them if it takes a few weeks or if it takes a few months. I'm okay because they're not going anywhere. I don't need to rotate in or out. It's not a matter of limited capital. I can hold, I'm comfortable, I can sleep easy at night knowing that, it's Walmart or whatever, right? So that's my approach to trading, contrary to belief of, what people think. Oh, you just buy the hottest stock and whatever's trending or, mentioned the most on Reddit or online chat rooms, then you buy that. No, that's not really my thing. And maybe it works for other people, but you know what? It's not really my cup of tea.
Oh, okay. And with that, like, sorry, I was just thinking about something, but then I had another question as well. I'll just jump to the other question. So like, you're predominantly in the U.S. market, right?
Yep.
Do you have actually? I just got back. So, two questions. Do you actually operate outside of the U.S. market at all? Do you trade, like, let's say, in the Asian market or the European market at all, or have you just predominantly focused in the U.S. market? And the second question being, what type of, like, stock cat, like, are you more of like a blue chip sort of, like that term sort of used, like those are the type of stocks you trade? Are you more like penny stocks, or are you sort of like the mid range, like what would be the word for it? It's like the new, like, pardon me?
Caps, yeah, mid caps is
Yeah.
another word. So yeah, so the first question, I would say 98% or so is focused solely on U.S. markets, U.S. stocks. The other 2% or so, Canadian. That's it. I don't trade, European stocks, listed stocks. I don't trade, Asian listed stocks. Predominantly, it's just U.S. and then a little bit Canadian. And then to answer your second question, for the kind of stocks that I trade, you could say it's large caps, right? So market capitalization basis, it's there's no hard number, but ultimately, companies that are probably over 100 billion in current market capitalization. Again, I'm not strict on that, but overall it's larger companies. Most of the time it's companies we've heard of, I've traded before. They've been operating for decades and decades. And I don't really trade the penny stocks and kind of like the fly by night stuff and stuff that just pumps. And I don't really, it doesn't interest me. I've done well enough in markets to not have to kind of trade that kind of stuff and take that kind of exposure. And to me, honestly, if I'm being frank, it's just gambling. People will call it what they want, maybe because, hubris or because they just don't have enough understanding of what's going on. But frankly, there's no edge, there's no consistency in trading like that. And it's just gambling. So if someone wants to gamble, I rather say, you know what, it's fine if you want to gamble as long as you're okay with it. Then I rather say someone go to Vegas or a casino. At least it's more fun. And you know what, my style predominantly large caps, not just blue chips, but large cap companies, and that's kind of my wheelhouse.
Okay. And looking back on, like, you started with $5,000. Growing that to over $2 million is like not an easy task. Like, why do you think you were able to do that? When a lot of people, like, a lot of retail investors get in the game and they end up, either losing money or sort of staying stagnant. Very few of them are able to grow to the sort of level that you have. Like to have consistent growth over many years, right? Why do you sort of think that you were able to do that?
Yeah, so another great question. For me, I always have to say, look, my circumstance, what I was able to do is not because I'm some genius or some math ways or anything like that. What I was able to do is based on many different variables that have to come together. But of course, even then, I'm not the average. I'm not the norm, right? People think, okay, well, 5,000 to 2 million, that's what I'm aiming for. And I say, whoa, you know what? It was a different market. I got to kind of bring them back to earth, because although I was able to do it, it's not the norm, as you said. Majority of people lose money. They have no idea what they're doing. For me, whether someone wants to call it, a mixture of skill, timing, mental fortitude, dedication, and of course some amount of luck, right? This is something some people will never want to accept, that some of it has to do with that X factor, which is a little bit of luck. um, you know I didn't just get fall into the lap of the market and just end up printing money. No, it was a lot of ups and downs. Like, there's plenty of times where I was like, you know what, I don't know what's going on, this makes no sense, I bought this company that is so amazing, but the price keeps going down. We've all had those kind of days. And you know what, when you're new and there's no one to kind of talk to or figure out what's going on, yeah, there's plenty of times where I'm like, you know what, I just want to stop doing this. But it's that persistence, it's that willingness to keep going. And I was able to do it slowly, patience, ups and downs, and essentially backing myself. So one thing that I was able to do is, once I had 5,000, grew it to 6 7, I didn't take the money out. I didn't change the process. I kept at it. A lot of people change the process. Oh, I made $2,000 off of 5. Okay, I'm gonna take more risk, or I'm gonna do something different so I can make double it even faster. No, I just stuck with it because I didn't do it for the money. And once I turned to 10,000, 15, slowly, took time. I didn't take the money out. I kept compounding. Right. And the beauty of being able to participate in markets, if someone has the ability to, is you can use leverage, right? I've used the word leverage before, and you can use leverage with options, but you can also use leverage via margin. Like real estate. When someone buys real estate, they buy real estate with a mortgage, right? That's leverage. You're using the bank's money, right, to essentially buy something and hoping that it will either generate cash flow or increase in value. So I too was able to use some amount of leverage, right, with the brokerage. The brokerage will give you some money. to be able to trade with. So if I have, $10,000 account and I have a margin account, I could use another 10,000 as well. So you notice how I'm able to use some brokerage money. Of course, it goes both ways. Leverage cuts both ways. It can compound and grow. It's like adding kerosene to the fire. It can grow your account much faster. But if you get it wrong, you're now out your own money, but also you owe the brokerage money, right?
Yeah.
So this is something that people need to understand. And of course, I did it in a very calculating way. When I was younger, I used to take massive amounts of risk, calculated risk, but massive amount of risk. As I've gotten older, I've had to scale back on the risks, because I don't need to aim for the fences anymore. I don't need to, keep trying to hit home runs, So, for me and for most people, I say just try and hit singles, and that's what we do. We go for high probability trading. We're not trying to make, insane returns in a short amount of time, because usually it goes both ways. In order to make an insane return and a very large return in a short time, you essentially run the risk of ruin. And so that's not what most people want to do, right? Whatever limited capital they're trading. So for me, it was a long, long journey. In fact, like I said, first 2 years, didn't make much, didn't make much at all. It was just something that I continued to do. And of course, making some strategic bets, strategic plays, and sticking with it. Sticking with it is what helped me. And I never took money out for many, many years. Many years, I didn't take any money out of the market. It's only over the last few years when I, when I have like excess of 2 million or something, then I just take it out because I don't need to keep that kind of money in there. It's not going to be serving my purpose. So, like I said, I take the money out at that point and I try and keep that account there at that 2 million mark for that specific account. And it doesn't mean someone has to have a $2 million account to do well or whatnot, but that's just something that, for me, I kind of keep it at that level. And it's one of those things that, there's plenty of people that have made money in the market, especially in this kind of market, either betting on something that explodes higher, and they make it a significant amount of money a lot faster than I did. But the issue comes is, are they able to keep it? That's what differentiates, traders who are willing to do this and wanting to do this for years and years and decades compared to someone who just wants to get rich and just wants to kind of strike it big and then either keep trying to strike it big and just bust out, or to just walk away. So contrary to belief, it's possible. It's just very, very rare. It's very, very difficult, right? Yeah. And for me, I didn't do it in a year. I didn't do it in 2 years. I didn't, it took me many, many years. In fact, now it's that, I'm at 13 years doing this. And, I've done, made many, many millions, fortunately. But it's not even about the money. For me, it's mostly about the passion, the ability to kind of continuously challenge myself. And the markets are changing every day. Every day is a new day, new challenge. So there's nothing like it that I've been able to find on earth that allowed me to do this.
Yeah. That's absolutely crazy. Now talking about, so I want to talk to you about quickly, going into pretty much your school, like how did that come about?
My what?
Like starting your investors club in like your school and stuff.
Yep. Yeah. So I started being more vocal and kind of talk about what I was doing and my journey, my successes, but also my mistakes, the profit, but also the losses. I started doing that probably, 7 years ago or something like that. Just because with the advent of social media, I was seeing a lot of garbage, a lot of nonsense, and a lot of, frankly, lies and false information there, misinformation. So I was like, this is not right. And people are falling for this stuff hand over fist. They don't know any better. So what I decided was, I'm gonna share my journey. I'm gonna show the realities of trading, the good and the bad, the realistic stuff, right? And although my circumstances, my results were extraordinary, it doesn't need to be to my level to be able to for someone to be successful, right? They don't need to make 2 million to be successful. They can, make 100,000 in a few years. They can make 50,000 in a year, whatever. That's still fantastic, right? So I decided, I'm going to try and share my journey, say what I have to say. And if people want to listen or if they value it, great. If they don't, then that's fine too. And to my surprise, positively, of course, that people gravitated towards it. They had, they liked what I had to say. They wanted to listen. They wanted to be guided and mentored. And for me, I was like, you know what? I love, I've traded markets for many, many years. You know what? There's only so many times you can look at prices move up and down charts before you start kind of becoming numb to it. So I thought, I if I can, trade alongside people or talk about markets with people, this is what I always wanted. I didn't have that. I couldn't because, back in early, 2008, 2010, 2012, it was still not, the way it is now. Instagram, wasn't a thing back then. The original iPhone had just launched, right? Back in 2007. So I never had that kind of community. I never had that guidance. I never had that support. So I decided to build and create something I never had for myself, and see if it's something that can help people. And I'm very positive, very happy to know and see the results from people, because it's been a game changer for people, because I see it. I see the results. People share their ups and downs with me. They share, their stages in life, where they are, and how it's made an impact, and what they've learned, and the mistakes they've made. And to me, that's one of the best things. It's kind of morphed from me trying to make as much money as possible early on to, of course, wanting to make money, do well in markets, but also help people, have a community, generate ideas, share our experiences, have fun, right? There's only so much fun you can have when you do something alone, right? So for me, it's been an amazing, amazing kind of growth, amazing kind of journey to get to where I am. And something I never thought would happen. When I started trading, I never would have thought in a million years that I'd be having, a video podcast with you, or have a group of other traders and investors that I get to, speak with or trade with and generate ideas with and mentor. Never would have thought that. I just wanted to trade and get good and figure this thing out. And here we are, it's been a fantastic journey.
Yeah, yeah. And sort of looking to the future now, do you think do you think you'll open like your own fund or something, or like, start your own hedge fund? Like, has that ever been a consideration, or do you just enjoy sort of trading with your own money, and sort of just building that?
Yeah, that's a great question. So, I have considered that. To me, it's not something I did want to pursue that, a few years back. But of course, there's a lot of red tape, there's a lot of regulation to that. And for me, it's like I look after my money in a certain way. When it comes to other people, me looking after their money, I'm even more cautious. I'm even more like, what, this is something I got to be extra careful with. And that doesn't lead too well when it comes to trading, because if you're more apprehensive, if you're way more cautious than you need to be, then you won't obviously take the trade. You won't take any risk, right? And when I'm handling my money, I'm okay if I make or lose. When it comes to other people's money, I feel like, what, it's a directly being in control of their money can change the way you trade, of course, right? We've seen it. We've seen people who trade, demo trade. It's very different than trading with real money. Same way, trading your own capital is one thing. Trading someone else's money, it's a whole another ballgame. And of course, the whole regulations and everything. And for me, I feel like it would be something that I would need to let go of. If I had to manage other people's money or have a hedge fund, I can't do what I'm doing right now. And I enjoy what I do right now. I can't be, speaking with investors and, managing, tons and tons of money, because in order to have a hedge fund, you have to have a significant amount of money to make it worthwhile. And, at that point, if I'm doing that, I can't interact with someone who, has a $10,000-$15,000 account that wants to kind of be guided through the steps. I just won't be able to do that. Right. So it's going to be a trade-off. And for me, I thought about it, in the beginning, the early days, I was like, maybe that's the route I want to go. And when I got close to it, I thought, no, actually, this is not what I want to do. I want to be able to trade my own money, trade my own book, not answer to anyone, and interact with people, because that's the most important part, right? Not generating the most amount of money. That's not as important to me anymore. It's now about doing well, but also helping people do well.
Yeah, yeah. Like looking at the market and sort of the landscape, like I've never really come across like any small funds, and like, to be honest, I've never looked into like starting like my own, fund or anything like that. But like like you're saying, like there's a lot of red tape, and you don't really see like, you know, a 10 million. Well, I personally have never seen like a 10 million or $5 million trading fund that you can sort of invest into. And is there a reason behind that? Is there like a minimum for you to sort of like, do you need like 100 million? Do you need like 200 million or like?
So that's an interesting question. So technically speaking, anyone can call themselves a fund per se. We do know you can, as individuals, you can manage some amount of money, whether it's for family and friends. And of course, regulations will vary based on where you are in US or Canada or elsewhere. So the regulations do change based on that, but you are able to manage, family and friends kind of money to a certain extent. You can't have like, oh, I manage 50 friends. No, there's like a handful, right? But anything beyond that, then it requires a lot of regulation and licensing, right? And the amount that someone is managing is secondary at that point, because you could manage, five people, their close friends, family, and it could be 5 million, it could be 50,000. That's still okay, right? As long as it's within a certain amount, sort of a people. Once it gets to a point, and the regulations aren't clear on this, once it gets to a point where, it's getting bigger and you want to charge people money for it, and you want to, kind of, provide reports, or you want to solicit capital, meaning you want to ask for money, you cannot do that without being licensed, right? You cannot ask for capital from investors without being licensed. And there's requirements on that. They have to be high net worth individuals, so on and so forth, right?
Yep.
And is it possible with 5 million? Sure, it's possible with 10, but the way the fund management and capital management kind of business works is the higher the assets under management, the more money the fund manager and its employees can make, because they usually charge about a couple percent a year on assets under management. And then, of course, they take a percentage of any profits that they make, if they make any. So if someone is, has a $1 million fund, and they're charging 2%, that's not too much, all things considered, for the year, right, to run the business. So the economies of scale, so to speak, the dollar amounts do make a difference in the operations. If someone's running it out of their room, or their dorm room, or their basement or whatever, sure, it's possible. You wouldn't know. You wouldn't really know. And with that sense, we can call it a fund. Someone wants, I get that, there's people, who've been featured in Bloomberg and whatnot, and they're like, 18, 19 years old, and they've been said they have a fund. Really, it's family and friends, but they call it a hedge fund. They call it a fund. So really, honestly, if you want to be a hedge fund, you want to manage a hedge fund, you want to run a hedge fund, you got to be in the, hundreds of millions to be ideally someone worth even mentioning. I've had experience in the space. I've been asked if I want to run one. I've been asked if I want to be on a team, and I never went ahead with it. Like I said, but ultimately, the word hedge fund is, it's like the word consultant.
Yeah.
Anyone can really be a consultant per se. All you have to do is have one customer maybe, or one person you just, help do anything really, and you can call yourself a consultant, right? Kind of like how everyone calls themselves a trader. And of course, as proxy, if someone wants to call themselves they have a hedge fund, then, they can't. It just kind of depends on how far they want to take that.
Yeah. Yeah. So looking to the future now, like where do you see yourself sort of going?
Yeah. So this is a unique one. Well, I'm 29. I'm going to be 30 in July this year. And, I'm fortunate to have done well for myself. I enjoy what I do. So the question always comes, what else? What do you do? What do you do? What else is there? And I tried to kind of answer that for myself by diversifying, making sure that I have other things, not just this. It keeps me growing, keeps me fresh. And, right now the answer is that I'm kind of comfortable. I don't want to say comfortable, but I'm okay with doing what I'm doing. Obviously, I have some passions and things that I have outside of markets. Life is also life. It's not just markets, right? Markets are a part of life for me. It's not the only thing. So for me, I want to do the best I can with what I'm doing now, but also take some time to enjoy. With obviously with COVID and everything like that, I haven't really been able to do much outside of work and business and markets, right? So I got married last year, but I haven't been out of the country since maybe 2 years or something, right? Just because the way where we are, right? But in terms of business going forward, kind of my visions and different projects right now. I'm like, I'm comfortable. I'm wanting the world to kind of settle down, at 2021, especially from a market standpoint, or even from a global standpoint, hasn't been any calmer or normal than last year. I think it's like 2020 part two, for if you
Yeah.
ask me. So I'm waiting for things to kind of just calm down, normalize. I'm waiting for things to, the world to kind of go back to how it was. Maybe never, it's never going to go back to exactly how it was, but at least a little bit closer to it. And then I'm going to see, how do I enjoy this? How much longer do I want to do this? Is it something that I'm still passionate about, which I am. I can say that, now I am for sure still, but things change, right? Maybe do I want to do this when I'm 50, 60? I don't know. I don't
Yeah.
know. Right now it's like I'm taking it day by day.
Yeah, yeah. So like is like a thing I've sort of talked to a lot of people about is like when COVID sort of like gone down and dissipated and stuff, like a lot of everybody wants to go traveling. Is that the same for you? You and your spouse, like do you guys have plans to like go traveling, go to Europe or go somewhere else?
Yeah, we would like to. We would like to. We haven't obviously anywhere since but we would like to. The more things open up, the more things become more stable, safe. Then of course that's definitely an option. Where though specifically we haven't nailed it down yet. But yes, I am hoping to at some point, maybe this year, end of this year, do some traveling if I can. Again, I always have to think, how far, how long can I get away, from markets? Because even if I'm traveling somewhere, I gotta still be kind of plugged in at some point. It's just the way I am. And, there is a lot of people depending on me. And sure, I can kind of stop and pause for a week or so, but the way I am, I gotta be plugged in somehow.
Yeah. All right. Well, awesome. Well, yeah, we're coming to the end here. So thank you for coming on the show, Rizwan. Where can people find out more about you? And also, is there anything else you want to mention? Any projects you have going on? Anything else you just want to say before we end here?
Awesome. Yeah, thanks for having me. People can, find out, more about me, what I do at www.rizinternational.com. My Instagram, YouTube, social media, everything is just pretty much Riz International. So you should be able to find me. You just type in YouTube, Riz International, or if you search up Riz International on Instagram, Facebook, you'll just be able to find all that. So, and I'm very open. I pretty much answer every question on social media, whether it's Instagram or whatnot. And you know what? I'm passionate about what I do. So if anyone has any questions or wants to interact, I am all ears.
All right. Awesome. Well, thank you again for coming on the show.
Thank you so much. Take care. Ciao.